you all for joining us today. My name is Audra Lavoie. I'm an alumni career advisor with the University of Rhode Island Foundation and Alumni Engagement. Today we have David Appolonia and John Dunn that are both going to be our guests and guide for the conversation. What I'm going to do is just lead us through a couple of introductory and recap. At any point, feel free to put your questions into the Q&A or into the chat feature. So what we're talking about, this series is all about access. So this was kind of a good idea that got even better and bigger and became a collaboration between Foundation and Alumni Engagement, the College of Business, and URI Innovate. So this has become a very big event, 3 weeks, 9 webinars, 3 different topics, and then all alumni that are speaking to us, which I've had the past few days to kind of reflect on this more and more. And the amount of time that goes into it and the prep and the pre-meeting and conversations and back and forth, it is very generous. We have a great group of alumni who want to give back to other alumni and students. And I think that's something that I greatly appreciate, and I'm really glad that you all can take advantage of. So for this series, we know that starting a business is something that a lot of people think about, and whether you're ready to do it or whether you're still in that thinking phase, we also know it can be something that can feel intimidating if you haven't done it before, or if you didn't grow up around other people who have, or you don't currently operate around other people that do. This can feel very new and different. So our goal with this series is to make it comfortable, to show you what is out there to support you and to help be a resource in your own pursuit. It could be a part-time thing, it could be a full-time thing. We've had entrepreneurs in this series who've been both, others who have, some who have inherited a business, some who have created a huge business, and others that are doing it while doing something else at the same time. So there's flexibility. It's really about what works for you. A couple of notes about this session. I record all the sessions. That's something that tomorrow I'll send out to you. I'll send out the slides, I'll send out the session, and I'll send out any notes that I take. During this session, you at any point can use the Q&A or the chat feature to put in a question. I will make sure that we get to it. I will tell you, John, David, and I were talking the other day. Both of them are very excited to hear your questions, and they have such a wealth of experience that whether you're at this beginning bubble thinking phase or whether you are up and running, they're able to answer those questions. A reminder that with all our series, the conversations are based on their experience. It's not meant to be a one-on-one business advising session. So like I said, this is a 3-part series. We've already gone through the 2 first phases. Phase 1 was all about the ideas and trying to figure out and get down to what it is that works for you, and really starting to take into effect what you have for resources, what you have for skills, things that interest you, where your talents and experience and network reside, and then types of business and categorizing them. In phase 2, which was last week, we had so many of these amazing resources that are both here in Rhode Island and national. There has been great growth in this area. I think everyone's gotten to the point of trying to make this more and more accessible to people. So you can easily find something if you're not in Rhode Island in what area you have. We were starting to talk about the business model canvas as being one of those bases to really get through your process, but then also as a guide going forward when we get to what we're talking about today, which is the logistics. At any point, if you've missed any of these and you want to revisit them, I'm happy to share with you. We've had all great sessions. So at this point, I'm going to pass it over to John. John's going to be our MC. I'll be in the background, popping in with your questions and advancing the slides, but I will leave it to John and David. Thank you both.
Thank you, Audrey. Thank you very much. Glad to be here. Glad to be available for a resource. David is a former student of mine, very successful in the area of M&A. My background, as discussed, is I practiced law. I'm a lawyer by trade, practiced law for 35 years, did a lot of work in small business development, small business finance, David, not to speak for him, but he's more on the higher end as far as M&A. What we're going to approach in this particular session would be starting the company from the onset, and just a quick review. I mean, if you have been involved in business, you understand that we have the critical component of any business is attempting, obviously, to grow the business, but to protect your other assets. So the thing you want to look at is the availability of certain business models. And in this country, unlike most countries, I teach the MBA course in law and the entrepreneurship undergraduate classes. And the critical thing in this country is you have a lot of opportunity to start companies. Now, again, you can start as a sole proprietorship. I've never been a big proponent of it because, again, the critical component of business is, in my opinion, is liquidity, leverage, liability, and taxes. Those are the things I look at. So you want to have liquidity, which means you want to borrow money, but you also want to limit your liability. And the corporate structures the structures that we have in the U.S. are, you can have a sole proprietorship, but you are individually responsible for any debt, problems, or other issues with that entity. We also have partnerships. Partnerships also are not, they're a separate entity per se, but you have, it's really what we call sole and joint liability. So if one of your partners were to get into some financial troubles, you could be responsible for a lot of the debt of the partnerships, and your personal assets could be at risk. And then we have limited partnerships. Limited partnerships are more an investment instrument used. A lot of them are used pre-82 in the 80s because of the tax implications. And I'm not a tax attorney, so I'm not going to give you an opinion on that. What we work with in our area are corporations and LLCs, limited liability companies. There is an LLP also, but at my age, when I was in law school, we didn't have LLCs. We didn't have limited liability companies, so we just had corporations. And corporations, once you follow the guidelines, and it's a state regulation, state charters. And in fact, that came from the Constitution when they were negotiating. They didn't want federal charters because they felt that would give too much power to the federal government. So they're state charters. You can incorporate any state that you want. You'll notice in the journal that a lot of your corporations are Delaware corporations. That's because they have a court of chancery and they're very pro-management. But any state you can do it. The fees are relatively simple. They've made the process easy. You go to the Secretary of State's office, the corporate division, the forms are there. You can either do the corporation or you can do an LLC. The difference between them are marginal now. Historically, your corporations, the critical component of the corporation, once it's established and you receive your charter, you have it. You divide. What I do on a board is I divide it. You have the individual over here and the corporate entity over here. The corporation, as a legal entity, has its own life. It can hold property. It can take on its own debt. And if you follow the procedures, it limits any liability to any shareholders or incorporators. And it's called a corporate veil. The veil goes right there, right down the middle. And again, when I practice, I never guaranteed any result. But you follow the procedures of a corporation, and that means you have your annual meetings, you have your own bank accounts, you maintain it as a separate entity, then they're not going to pierce the corporate veil to come after you individually. However, if you were to commingle funds or something of that nature, it does leave an opening for an attorney to challenge that veil. But once it's established, that corporation can take on it takes on its own entity. The only issue it has tax liability. And I'll defer to David on the tax side of it, because the other thing we have in this country is what I consider from an academic situation, you get three types of corporations. You have an S Corp, a C Corp, and a P Corp. The S Corp is a small business corporation. The C Corp is a closely held corporation. And the P Corp is a publicly traded corporation. Now, at this particular juncture, I think most of it would be starting off as a small entity. And the problem with the corporation is it's called dual taxation. You're going to have tax liability to the corporation, and then any distribution to the shareholders will be taxed also at that rate. So there was an issue there. So what the government did to the Internal Revenue Service is they gave a certain status to S corporations, small business corporations. Historically, they were for very small companies, 10 shareholders. They've now been increased. The last time it was 75, it could be up to 100. I haven't checked, but 75. To expand it, once you qualify for that, and what you do is 90 days from the date of your incorporation, you contact the Internal Revenue Service. It's a very simple form, and then they will grant you the status of an S corp. Once that's been granted, that means that the corporation will pass through all of its profit or loss to the individuals, whatever portion of basis that you own in stock. Obviously, when you start the company, the ownership is illustrated through stock certificates. Now, if you're a larger corporation, a C corp, you're going to have the dual taxation. But what's great about this country is you can go from an S corp to a C corp to a P corp, and you can follow any corporation. You can follow Amazon. You can follow Zuckerberg with Facebook. I'm sure they all started as S corp. I'm sure Zuckerberg started as just a sole individual with his 3 partners at Harvard. Then he went to a corporate structure. Then he more than likely was an S corp. And then as he grew and took on further shareholders to raise capital, he went to a C corp. And once more revenue grew, it went to a public offering.
So, John, you answered one of the questions. We have 2 questions. One of them was, can you go between one sort of entity to the other? So what you just said is, yeah, I could start off as one sort of incorporation and then switch. So that was one question. The other question is, at what point in your business do you recommend becoming an LLC?
Well, the LLC is just a different entity. It took historically, S corps were held to 10 shareholders. So to make it more competitive, they established LLCs. And it was state approved. About 20 years ago, they started it. Each state started it. So you couldn't rely on it because states didn't have it. All states have it now. So what you do with an LLC is it's a hybrid partnership, taxation, and limited liability corporation. It's the hybrid between them. So, and at this point, it's a moot issue. The only reason I use corporations is because of my age. When I was in law school, we didn't have that. It wasn't an option. And then all my clients were corporations. Towards the end, now if you hired a younger attorney, I'm sure they'd be LLCs versus a corporation. The management's a little looser, the fees are a little bit looser, but it's the same net result. Now, again, just to make sure we're clear, if you test us on this, on your LLC application, it'll state you can be taxed as a partnership or a corporation. And again, I defer to David on this.
Well, you got to be careful because when you start going from a C corporation, let's say, for example, you start with a C corporation and you build up profits within that company, there's a tax impact if you convert from a C corp to an LLC. So you can go from these various entity structures, but you always have to look at the tax impact.
Right.
And the reason LLCs are frequently used is because they're more flexible. What does that mean? That means if you start a business and you want to let a new partner in, it's easier to come up with flexible arrangements on who's going to distribute, how you're going to distribute the profits, how much capital is going to be put in. It's a little more of a challenge and difficult with a C corp. So that's why you'll see a lot of real estate partnerships that are now LLCs.
Correct.
Because they have the limited liability, as John mentioned, of a corporation, but they have the flexibility of structuring like a partnership.
Correct. And the only caveat I have, and it'd be misleading because we will put all of these entities together for you. And David's got as much experience, not more than I do, but if you're trying to raise capital, there's 2 ways to raise capital in a company. One is through debt and one is through equity. And in a small corporation, you're not going to be, you've got limited access to capital because you can't sell securities without registering things of that nature. So once you've got, like, if Dave and I enter into a contract and we have 50% of the shares, that's our equity position. If we're going to acquire liquidity, that is to take on debt, I don't want anybody to believe that any commercial bank, and Dave has more experience than I do in my limited experience. No bank is going to lend a startup corporation money unless there's a personal guarantee from the shareholders, which negates the liability issue. And be careful of that because, and David can speak to it better than I can, but personal banks are not, commercial lenders are not that interested in startups because obviously you have no asset base, you have marginal cash flow, and your financials could be. But I'll let David speak to personal guarantees.
Yeah, I mean, I just wanted to mention, I mean, I think our goal today is to, you're looking to start a business, and I don't know who the attendees are and what their backgrounds are, but our goal is to at least put you on the right path. You know, every year, we say about 137 million companies start, or businesses, not just companies start, and the failure rate is 90%. So 137 million start, 123 million go out of business. You know, it's not a great rate. So our goal is to, you know, it's only a 1 hour discussion, is to kind of put you down the right path. And, you know, we could speak extensively through each idea that we come up with to, you know, put you on that right path. But each one, you can spend a dramatic amount of time and hire professional advisors. So, you know, I think that, you know, as John mentioned, it sounds like who we're speaking to is people who are going to start small. And the question is, when you start small, you know, one of the reasons for failure is because they're undercapitalized. And most, you know, there's an old saying that, you know, the first round of capital is put in by friends, family, and fools. So, you know, I think that John's comment on personal guarantees, personal guarantees early stage are typically required unless you've developed some disruptive technology that's going to shake the market, and you think there's something that's really going to be, you know, a company that's going to grow. This discussion could be, you know, tailored to, you know, a small business. You could start a landscaping company, a coffee shop, you know, something that's going to provide income. Or you could have a vision to say, well, we're going to build, you know, a global company, that you're going to start small, and then eventually you have to become a C corporation to raise capital, you know, for various reasons. Not only to protect the assets from liability, but also it's usually the preferred structure, you know, for investors. Not always. I mean, you can get into each one of these things that are on the board here. You could speak to the tax impact and the financial side, but I think if you're looking to start a business, you're trying to keep it simple, you're trying to keep your costs low, and you're trying to figure out how flexible you can be to make it a success. So with that.
So I appreciate the kind of the whole view of is a lot of movement that can happen. LLC sounds like it's the most common entry point. And then if I am looking, once I'm established, to potentially move around, I want to take a step back and look at what that tax impact is. So yes, I can move, but I want to understand and have kind of that full picture. So I want to go and think about this question a little bit more, because I think you had a very impactful comment, which is that a large amount of businesses fail at first. And I mean, we've talked about failure. We've had other entrepreneurs who've said, yeah, my first business failed, and that's okay. It gave them the learning opportunity. It gave them a reflection, then they decided. But if I am testing the waters, if I'm still playing with my idea and seeing if it is a viable thing, at what point do I have to become official? Does that make sense as a question?
Yeah. When you're going to launch, I mean, when you determine that you're going to engage in the company or in the business model, then you're going to have to pick an entity. If you're just doing a due diligence, you're reviewing material, you're doing research, and that nature, that's fine.
Yeah. I mean, just to support that comment, I mean, you can have a business that you may want, that there's very little risk in the business, and you just want to get it up and running, whatever. Let's say it's a small online business and you want to sell a product. You know, the question is it worth spending professional fees? Is it worth paying the state of Rhode Island? Every state's different, but the state of Rhode Island is a $400 minimum tax. You have to keep a complete balance sheet and P&L and book of records. You file a corporate tax return. So the point is, if you set up an LLC or a C corp or an S corp, you know, you're probably going to incur fees. So many people, you know, start a small business as a sole proprietorship to see if it's going to make it, if not make it as a business, but it's going to be able to be launched and it becomes a viable entity. I would say, shortly after that, and your liability can be covered with appropriate insurance. But it depends on a lot of things. I mean, it depends how much equity you have, how much you have to lose. Some people have nothing to lose. It depends on whether there's any assets in the business. Some businesses don't have any assets. It can be a personal service business. So I think, there's a variety of factors. I think that, most of my clients would come in and it depends on facts and circumstances, and depending on what structure you would choose. But, my advice is usually, to minimize and be part of that success rate, you have to do your homework. And that homework is, understand your market. Is it a well-defined market? Are you willing to work as hard as you can? It's a big commitment, because many folks want to start a business, but they may be able to make more money in working for a large company that can scale, but they may have a vision that they want to develop a business and grow the business. The business also, if you do it I don't want to say the right way, the right business, you could build enterprise value in the business, not only getting paid based on profitability, but you can also create value by building reoccurring revenue, because these businesses are all valued based on net cash flow. So the point is, it's hard to answer any specific question. It really depends.
So let's say we are moving forward, we have an idea, whether big or small, and we're ready to get started. We've decided on that structure. What are these next steps for us?
So we've decided we're going to be a corporation or an LLC?
So whenever we decide, what do we have to do as far as registering our business?
If it's a corporation, you'd simply go online. Let's say it's a Rhode Island-based corporation. You go online, Secretary of State's office, their corporate division, they'll have the forms. It's called Articles of Incorporation. If it's an LLC, it'll be Articles of Organization. And that's when you'll have your name. You'll do a name search, because obviously you don't want to take somebody else's name. You'll do a name search with them. If you find if it's a free name, you'll reserve that. You'll pay your fees. That the Articles of Incorporation or organization, you have to list your name, obviously, the purpose of the corporation. Corporations are perpetual. That way you can transfer ownership, or partnerships are usually for a limited period of time. When a partnership may leave, they can end that partnership. So a corporation is perpetual. So again, if David and I were a company, he wanted to leave, I could buy his equity, and the corporation remains the same entity. And then once you've established that, the advice I always gave everything, I mean, I was an attorney, Dave's an accountant. I think the most important person in a new business is your accountant. You've got to set, Dave, I'm going to refer to David on this, but my clients, it's your books. The lawyer can set you up relatively simple. It's not, it's not that difficult, but the bookkeeping, I'll defer to the accountants.
Yeah, and just to follow on, I mean, once you register a business, you have a business name. I would just caution before a federal ID number is just a form. Okay, that federal ID number, it's an identification number with the federal government. That is almost like a social security number for that business. And you may need that number. Sole proprietorship. If I want to start a business on my own and I wanted my own accounting firm, I don't have to have an 05 number, it's federal ID number. I use my social security number. But once you establish an entity, you need a tax identification number. So that's a simple form. I would just say, as far as all the registration documents, some of the things that I've seen in my businesses, I think you're just going to be careful, because you have state regulations, you have towns and municipality regulations, you have certain businesses that have different licensing regulations. Obviously, restaurants have different regulations than an accounting practice. So there's lots of resources on the web at the state level, through, and it sounds like you've already addressed this in your first series of discussions, but I would just make sure that you know the regulations, you know the licensing requirements, you don't get yourself into any trouble before you start. And then you get the Department of Labor and Training, because if you are not just a sole proprietorship and you have more than one employee or one or more, you have to have workers' compensation insurance. So even though it's simple with some proper guidance, you know, you can definitely run into a couple of traps if you don't do your homework, you know, before you launch. And I can obviously, walk you through the process, the big picture process of, doing, obviously you're going to market study, you're going to understand your competition, you have to do a financial model. This stuff, the structure of the business, the identification numbers just kind of puts you on that registration form to say, hey, federal government, state government, here I am. Now we're going to keep books and records, and then you're going to have filing requirements. Now you have to keep pace. So I don't want to minimize it. It's probably the easiest part of it, but necessary.
So it sounds like, there's a lot of everything is case by case, but you want to do the due diligence. You want to have some really good informed conversations. Sounds like a lot of this information is readily available online. And some of these are really easy, like the tax ID number and deciding what the structure is, and then the name, and all this is going to start kind of scaffolding so that we can get to the point where we can open up an account and just become increasingly official. We have a question. How do you design your financial systems so they will work effectively for you from startup to growth stage to scale up?
How do you design it? It depends on the business. I mean, there are, based on the question, you're never going to get a system that you're going to start with that will grow if it's a fast-growing company. I don't want to say never, but these enterprise value systems can be very costly. But there are some very sophisticated systems for not a lot of money that can do great things. So it depends, obviously, on whether you have inventory or whether you have an online business. It depends on the nature of the business, manufacturing operation. And you're right. I mean, you have to do your homework and make sure you understand if it's going to do what you want to do, because you have to run the business by the numbers. Your numbers have to be current and tracked every month. And then the easy part, setting up that checking account and capitalizing the business with either wherever you get the capital from, may it be a family member, a bank, your own money. But I think any business can make money. The question is how do you manage it? What's the right cost structure? When do you scale up? And what system are you going to pick that you know how to use? When you're running a business, it's very difficult to do all that. So you're probably going to end up hiring either a bookkeeper or an accountant that's familiar with that specific system. And fortunately, as you grow, you usually should have profitability and grow, and you're probably going for a different system. That's the reality.
So, David, you mentioned something really good, which was around when you scale up. So when do I do that? When do I know that I'm in the position and ready to scale my business up?
That's a hard question. You'll know. I mean, when I say you'll know, I mean, obviously, any business is built to come up with a certain amount of volume and capacity, right? So when you start understanding how well you're doing in business, and whether you're taking market share in the business, and you actually think that you have more demand than actually capacity, and you decide you're going to grow. So what does that mean? Are you going to put a new location? Are we going to add people? Are we going to increase the types of products that we sell? It all depends on how the numbers and profitability function. And then you have to assess whether the risk of scaling up is worth it.
So we have a question. What if your startup is based on a product or invention? Is it worth it to immediately buy a patent with a limited startup budget?
What was that? To buy a what?
when you look at IP, intellectual property, the concept of patent is something, if you have an idea, that's a federal issue. The federal government has made it, and I mean this is relatively easy to go online and pursue a patent. Buy a patent can be very expensive. Usually you don't buy them. If you develop a patent, if you don't want to produce the product yourself, you can license it to a manufacturing or some other entity that can manufacture it and sell it and then give you a royalty or a percentage of the profit. But a patent in itself is a property interest that's given to you by the federal government once you've proven to them that you've invented something or the invention or improved a product to make it a new product. You can't copy a product, but it can be a new product. The example I give my classes is if you go to Dunkin' Donuts, they've got a certain type of cap on their coffee, and they've got a patent on that. If you go to another entity like Starbucks, they'll have also a cap, but it's a different type. They'll have a patent on that. But you have to prove to the patent office in DC that this is a new invention, and you do that by filing the appropriate fees. And again, I've done it for clients. It's not my area of law, it never was, but and I say it's relatively easy. But buying a patent,
well, I'm going to give you an answer. It depends.
Yeah.
You know, it's not a good answer, but it depends. I mean, if you have some type of technology or product or whatever being patented that you think is worthwhile, and you think that investors like it, and it costs you, whatever it costs you, may be worth it.
oh yeah, I mean,
It's hard to defend a patent.
yeah, it's worth pursuing it. It's worth pursuing if you have an idea to get it. And again, the other thing I'll advise you, if in fact you have an idea and you want to share it with people, make sure you get a non-disclosure confidentiality agreement in place, because if you share that with them and it's not in place and they go and patent it first, then you're at risk. So if you do have these ideas, it's best to get counsel. And best thing to do is get a professional that is a patent attorney. It's a specialty in law. They'll help you, and they'll also have access. They can have access to capital, because a lot of your patent attorneys work with a lot of venture capitalists. And again, this is on a scale, but you can pursue it that way.
Do I have to? Or do I have to wait? So if I have a product and I want to go through the patent process, do I have to wait till it's complete, or could I begin the process and begin production?
Well, there's two issues. One, you have to do a patent search to make sure you're not infringing. Because if somebody already has that idea and is patented, then you cannot do it. And then you want to, depending again, as David always says, it's a matter of scale. It depends upon what you're going to do with this product or idea. But you should research that, and then you should patent it. Because if you do put it in the public market and it's not patented, somebody's going to take it.
And that's why the answer is depends.
Oh yeah.
Because if you have this great idea and you think you're gonna knock it out of the park, and it's gonna cost you $10,000, $20,000 to patent it, whatever the number is, and you think you're gonna make millions on it, it's worth it.
Right.
If you think that it's a long shot, it may not be worth it.
So I know finances is definitely David's wheelhouse. And the question around what money do I need to get started? You both had started referencing, all right, this filing an LLC or filing for a certain corporation, there's going to be a cost with that. Putting aside product costs, what are the costs? What money do I need to plan for to get started?
Again, it depends, right? I mean, you could have a business that you start out of your home where you're not paying rent, and you're going to build a website, and you're going to do some marketing, and you're a sole proprietor, and you have a cost structure that's fairly lean. You know, based on that, you're going to come up with a budget to determine what the startup is, or you may determine that you have to actually rent space for whatever that may be for that type of business. So I think that, you know, one of the leading causes of business failure is being undercapitalized. So, you know, what that number is, it could range from, you know, thousands of dollars to God knows what, depends on the business. And, you know, I think that this is this is a fundamental process. In order to answer these questions, before you kick a business off, you have to do a financial model which captures all your revenue and expense assumptions. And usually you're going to do kind of a, hey, we're going to do a minimum here. This is going to be our midpoint if we really knock it out of the park the first year. So, that financial model should be built by month with various assumptions based on revenue and what the assumed gross margins are, cost structure. And that model will help determine these questions. That model is necessary in the event you ever want to go to an investor or a bank. That's the first thing they're going to ask for. So, that's part of a business plan. But, what typically happens is if someone doesn't document a business plan, a formal business plan, they should build that model anyway on Excel spreadsheets, and which is obviously very easily changed and managed as the assumptions change. But that should tell the story, if well thought out, to limit your risk on whether you should go into that business or not go into that business.
So when we talked about resources, we talked about the business model canvas. Is there something that you would recommend for when I'm really starting to address the financial part? Is there a resource that you like to help guide people in this area?
You mean for the business model itself?
For the financial piece.
Yeah, that's what I mean, the financial model. I mean, what's frequently used is just Excel spreadsheets. I mean, it's like anything else, you have to know how to build it. But, if people understand how to do projections based on a projected monthly profit and loss statement and a balance sheet and a statement of cash flow, those become kind of a roadmap for the business by month. And as the business develops, whether you're behind or ahead or on target, you constantly reforecast to look at what's actually coming off your financial statements into that model to guide that business. That's what happens every day in the real business world. On a small business, it can be very simple. Obviously, in a big business, it gets more complicated. These businesses, to kick one off, I would just say it depends on what the business is, but every business needs a financial model which provides budget, discipline, and a roadmap on what you're trying to achieve. And it also provides an investor with what's in it for them. So if the only individual investor is the sole proprietorship, you still want to know what's in it for you.
So we had talked, you had referenced business funding a minute ago, and you said the same thing that another speaker did, which was for funding, it was friends, family, and fools. Tell us more. If I am a small business, small startup costs, how can I get my business funded?
Well, it doesn't matter. So let's say, for example, you've got family members that have some money, and they love you and they really want to back you. That's not a good reason to make an investment. So some of the things that I just mentioned, it doesn't matter if you're preparing this for your mother or father or uncle, or you're preparing it for a bank or an investor you never met before. The same disciplined approach should be applied. Understand your market. Is there a need for the product? Do your market research, understand your competition, determine how you're going to differentiate yourself, put a financial model together, understand how you're going to manage the business. If you can answer all those questions and you can take a deep dive into each one, you're ready to speak to someone and ask a family member for money. And obviously they're looking at you saying, well, how am I going to get my money back? And how am I going to get a return on the investment? So, obviously they're going to cut you some slack because they want you to make it and they want to start you. But there's an old saying in business, risk versus return. So right now, if I was going to loan you money, I can't get 1% in the bank. And the question is, how much risk am I going to take to loan you money and what's in it for me? So if you go outside of that, you're probably going to give up more of your business. Nothing's for nothing. So usually early stage, you're usually giving up equity. When you give up equity, you give up a certain amount of decision making, you give up ownership. And if you look at a business as kind of a pie, You say, you know, how many slices in that pie? And if you give up too many slices, there's not as much left for you. And when the business grows, there's not enough left for other capital investors. So you have to be careful. But there's no hard answer for any of these things. So I would just say each step you kind of proceed with caution. You have to be thoughtful. And if you're not, you probably shouldn't be in the business anyway.
And when it comes to my business expenses and the profit, you had said for, starting to map out costs, just an Excel spreadsheet. Is it the same thing once I'm serious and I'm trying to track the costs and my profit?
That's a little different. So, there's some, QuickBooks, that's a very common program, right? And they have all different levels. Intuit has all kinds of levels of QuickBooks. But, once you have a business, you're going to keep a balance sheet, income statement, just to keep track of your financial statements, for financial reporting, as well as understanding what your assets, what you have, what you owe, what you own, and obviously the business volume and revenue and expenses. So, no, I'd recommend having a accounting program put in, like QuickBooks, that is automated. And if you don't understand accounting, then you probably should get some help. I wouldn't try to do it myself, because even though it becomes fairly easy to use, you still have to. I've seen a lot of startups where they implement QuickBooks and they screw it up pretty quickly. So that's something like everything else. There's some great tools out there. You just have to you have to know what you don't know and get a little bit of help, and you should be on your way.
For P&L, balance statement, cash flow statements, is there a library of these by industry segment so I do not have to start with a blank slate?
What do you mean, for comparison?
So the question I believe is, does this stuff exist where I can kind of fill in the blank? So just like we had talked business model canvas, you had mentioned, when it comes to costs, you would just go with an Excel spreadsheet. But when I'm actually tracking the costs outside of QuickBooks, which you mentioned, is there any other area where you would say, oh, this is a good resource by a certain industry, or here's another area where here's another guide resource that you find useful?
You mean the type of software, P&Ls, account? And honestly, there's lots of good tools out there, but I don't think there's any standard for any business. If you take a look and you see whatever, you look at a manufacturing company. I mean, the nature of the business could be manufacturing, could be manufacturing different things. So you're never going to be able to look at something and get that standard. But I think if you either check with an accountant, a CPA, or some type of business advisor, they should be able to coach you to get a handle on what your cost should be. But the key to the whole thing, I don't care if you're selling time or you're selling widgets or you're online. The question is, what's the appropriate selling price? What pricing power do you have? What's your cost structure? What's your gross margin? And what costs are you going to take out of that, which you develop a net profit number, and your system should be able to track and analyze that. It's simple to read and understand. So it's nothing, none of this stuff is complicated if you know it, but you can say that about everything in life. So there's an old saying, the devil's in the detail. And what happens is when you start a business, you start doing business volume, you don't have a good system, you can't track the business expenses, and you stop not to understand where you are, things could go off track really easily. That's something you don't want to do.
Now, if I have started my business but have yet to turn a profit, when do I have to file taxes?
Well, just because you don't have profit, you still have to file the taxes. So, the tax filing deadlines vary depending on the type of entity that you have. If you have a sole proprietorship, you're going to file a Schedule C on your personal tax return, which is due April 15th, and there's various extensions. But the extensions usually don't give you more time to file. I'm sorry, they don't give you more time to pay. They give you more time to file. A corporation, they're due, like September. Well, usually it was March 15th. They actually just pushed to April, and you can extend it to October 15th. The point is, you still have to file, and to file, you need to keep good books and records, because in the event that you get audited, the IRS is going to look at those books and records, to see if you're doing things legally and legitimately. So that's why when you talk about starting a business, having a plan, having a bookkeeping system that's put in place, having the ability to track your financials, to stay on budget, so you make sure that you know where you are at any time, and then filing taxes, the oversight in the process is very important.
So this is our last formal slide, and we're doing good on timing. So at any point, people continue to ask questions. Thank you. We've had quite a few. One of the questions we had goes into this first square. Now, this was advice from the Rhode Island Small Business Development Center, which was, when I'm thinking of starting, to look to the acronym BAIL. I want that bank. I want to talk to an accountant. I want to look at insurance. I want to look at a lawyer. One of the questions we received is, how do I recognize a good bookkeeper or accountant?
Well, the CPA certification is a designation that is a professional designation. So, I would recommend you deal with a CPA. It doesn't mean that all non-CPAs are bad accountants. I just think that it's a certification that differentiates you, because it's a very difficult process and exam. You need experience to get that designation. Bookkeepers, there's many good bookkeepers that may not be able to answer some of the questions that were not questions, but some of the points that we raised today, because they don't have the experience, but they're very good at keeping books and records. So it's a referral business. It's all about, if you identify anyone, speak to clients that they currently have, and get behind the curtain to see if they're doing a good job, what they like, what they don't like, and have them provide you with sample books and records and how that's going to help you manage your business. That's how I evaluate a bookkeeper. So it's like anything else. It's pretty much referral and referring to.
All right. So we can ask for examples. A CPA is a really good start, and referral, of course, being one of our best guides. We had talked about establishing a bank account. When I'm establishing a bank account, is there anything I should be considering? Aside from like general costs of starting it up, are there any other special considerations?
Well, I think the only thing today is, online banking is the way these systems work with bookkeeping. So I would determine what type of business you need, the bookkeeper you're going to have in the system, whether it's compatible with online banking, and thinking through day to day, how are you going to manage this business? So for example, if you have to write a lot of paper checks, because it's a COD business, maybe that online banking isn't going to work for you. If you have a business that has purchase orders, and you have accounts payable, you have 30 days to pay, and you're going to go through kind of a list of bills and cash requirements for your bookkeeper, every 15 days or once a month, and that just has to be compatible with the bank and the online banking. So it all has to work. So it could start from a simple checkbook, and convert to a more sophisticated system when you're ready to do that. That's not, I'm not minimizing, but that should not stand in the way of starting a business. Most of them start very simple. They learn as they go, and then you become a little bit more sophisticated. How you're going to put process and people in place, to support your needs. And at first, the founder is usually doing many different things, and then you determine what you can leverage and outsource. I hope I answered your question, but again, it depends.
Yes, thank you. So with insurance, it is very easy for me to understand that if I had a physical space, I would need insurance. But say I am somebody who is in an advising position. So I do career services. Say I'm doing career services outside as my own sole proprietor business, or that I am doing something like going into other people's homes. When do I need insurance? Do I need insurance for my business?
It really just, it's an issue of liability and cost. Depends upon your profession, what the, being an attorney, it's not, you definitely want to have insurance, but it really comes down to what the exposure is to your loss, the risk of loss. So in that situation, I always would want to be overinsured, because that takes away all risk of losing personal assets. Again, as David said, if you're just starting out, you don't have a lot of assets, then you really don't have much to lose. But and then it depends upon the advice you're giving, the extent of the advice, what it can lead to as far as damages are concerned. But then it comes down to the cost of insurance. Professional insurance is usually reasonable. So I always advise my client, whenever you can insure against the risk of loss, do it. As I would now. I mean, you insure your home, you insure your cars. So I would, but I'm a big proponent of reducing risk. So I tell you to get insurance. But again, that's based on cost, based on cash flows.
But again, it depends.
Right.
It depends on, let's say, for example, you're going to launch a coffee shop, and you're going to be the new latest and greatest coffee shop in Rhode Island. You're going to have insurance requirements for landlords. If you're a professional liability business, professional business like an accountant, you're going to have professional liability because you can make mistakes. You can be sued. Your contracts, when I say contracts, your engagement letter, or however you do business, you should have reviewed by your lawyer that will disclaim a lot of that liability. But no matter how much you disclaim, someone could still sue you, but it should be addressed in your agreement on how you do business. So in your example, Audra, if you actually were advising someone on what you do, and you had very specific disclaimers that prevented you, you might decide, hey, you know what, it's a long shot. I don't really need professional liability insurance. There's always an outside chance, but I don't need it. So insurance is a good thing, but you can also prevent some of the risk with appropriate language in a contract.
Right.
And I'll mention personally, so I'm part of a association, and we're a nonprofit. We have a board of directors, and we decided to get insurance on our board. And we consider the probability to be next to none that we would have an issue. But I think it goes to John's point of it's better to be over prepared or over insured just to have that peace of mind in this situation, because it wasn't a very costly thing for us. So if I'm starting my business, do I need a lawyer?
Again, as David keeps saying, it really goes down to how deep you want to go into it. As far, and again, I practiced for years. I do think that attorneys charge way too much for a lot of services. So as far as incorporating, I think the government set it up, the states have set it up so you can do it yourself. I would counsel somebody to have a meeting with an attorney just to make sure they follow the guidelines. But you are going to need legal counsel, especially get into contracts, negotiations, banks, gives you credibility with your banks. So, again, but I would definitely have a fee arrangement set up in advance with the attorney.
And let's say, I'll just add to that. So let's say that you do a sole proprietorship and you do it alone, and you don't have any partners, and it's really simple. Maybe you could start with a lawyer, but if you get someone else involved in your business, and you're probably going to need buy-sell agreements, there's lots of disputes that happen between partners. It's a lot easier to start a business than to get someone out of the business. Things happen where you're young, you're out of school, you start a business, everybody's 50-50, contributing 50-50. There are disputes that happen. People have marriages and divorces, their spouse ends up with the stock. So There's all kinds of things that happen that a lawyer should be able to help you address. So I would say if you can afford a lawyer, yes, you should get a lawyer. But like everything else, you have to focus, you have to do your own homework, and then you have to focus them on what you're trying to accomplish. So the beauty today is all the information's on the internet. You should read about it, and lawyers are expensive, as accountants are. And if you do some homework, then they can do their job, get value for your dollar. But if you're all over the place, you're going to run up lots of fees and not going to get it.
Right. And the only advice I always give my clients, even Dave is correct, if you're going to bring other people in to your business with you, then you have to you've got to be proactive in making sure that if it is going to be dissolved, there's a mechanism within your contracts to dissolve it. You do not want to litigate. One thing in business you don't want to get into is litigation.
So I appreciate that comment about, we have all these special considerations and we have to do our research and go through the process for any industry or business we're doing. But there's also another layer of consideration if we're doing this as a partnership. And a lot of what we talked about before were comments on you don't have to be the best at everything. If I'm starting a business, there's areas of my expertise, but then there's things I might hire out. At some point, somebody might say, gee, a partner would be great. And if I'm doing that, like David and John are saying, is all right, that takes another extra set of considerations and making sure we really have a good understanding and things outlined from the beginning. So we have two questions here. One is, how much should I expect to pay someone to set up my financial statements on a new startup? So if I'm hiring that accountant and I'm saying, get me started on QuickBooks and just get me legit, how much should I expect to pay somebody?
Okay, let me just answer that. QuickBooks is fairly easy to set up. The startup isn't that complicated. You're usually going to pay an hourly fee for all the transaction activity. So, I think that if you met with someone and said, here's the business I'm going to start, and this is the chart of accounts that I need to track my business, and they devise a custom set of accounts for you, I would think that they should be charge you something like $500 to set something like that up. I'm guessing, because they're going to charge you for the time to meet with you, the understanding of your business, and then they're going to put the chart of accounts. But the actual fees depend on the transaction activity and what they do, whether they keep payroll, whether they send bills, whether they keep your receivables. It's all pretty much an hourly rate business.
And the second question, we talked about the accountant before and how to start going through, and that word of mouth was a big one, looking for a CPA, being able to ask for examples. When we're interviewing some of these other professionals to find who's the right fit for us, any tips on that? What should I be asking them? What will give me the behind the scenes look to know that they're very skilled in their practice?
On the legal side, we don't have designations. So the best thing to do is check the Bar Association. And then word of mouth, as David has always said, is the best way. But you have to make sure that your attorney is seasoned in the sense they have some experience. When I graduated from law school, I was educated, but I didn't. Then when I retired about 5 years ago, I knew somewhat what I was doing. So you have to make sure that the attorney in my profession, not talking about accountants, has experience to do it.
It's going to be the right fit. You're going to find that a lot of these professional services can all do it. Many of them are not even going to take a startup because they're too busy. So you want someone that is going to relate to you, the business, and has the ability to do what you want them to do. So other than word of mouth and understanding who's who, you can have the best brand name in the business. But if you can't get to the people who really can help you when you're dealing with relatively inexperienced folks, that's not going to help you either. So, I think you'll find your way fairly easily. There's lots of these resources and people will recommend you along the way, depending on what business you want to start.
So we are just at 8 o'clock. I'm going to just reiterate some stuff. And then my last question will be for John and for David about if you have any final pieces of advice that you would recommend for people, or if there's anybody, any organization you would really recommend people look to get started to help guide them through the process. So you two think about that for a second. I'm just going to reiterate, a lot of what you both had talked about is each one of these is so customized according to what industry and what type of business and what you're doing. So one of the guides right here is about, do I need a license? Do I need a permit? There's a link to the SBA. We had talked about the concept of getting a patent, and it was recommended that if I have a product, number one, I want to do that back check to make sure it doesn't already exist and I'm not infringing on somebody else. And then number two, yeah, it's worth starting the process. And then when do I need to become an official business? Really, when I start operating as a business, I should be official, whether that is starting as that sole proprietorship, which might be the easiest entryway, or an LLC, which is one of the most common. But as soon as I'm operating as a business, I want to be established as one. So, John and David, any either a final piece of advice or a organization that you would recommend to help people through these processes?
The recommendation I always gave my clients, or especially I have a lot of students come to me and they've got great ideas, a lot of people in engineering. What I tell them to do is, if you've got a great idea, get the best professionals you can, because those professionals, though they may be a little bit pricey, they have access to other people. So a good attorney is going to have access to capital or some type of banking commitment. Accountants have a lot of it. So my recommendation is, if you think this is going to be a concern that can grow, set yourself up early and get best professionals. Even though they may pay a little bit more, they get access to capital, they get access to other investors. That's always been my advice.
Yeah, and the only comment I have is, it sounds like the different series that you've already put on, you've addressed some of this, as far as some of the resources you have here at the university, as well as the Rhode Island Commerce Department. They provide startup assistance for accounting and finance, business planning, marketing advice, site selection, supply chain. So I would just, again, you have to do your own homework, and you have to be, very diligent and disciplined to do that homework. So, I think that what happens is, by utilizing some of these free resources that are publicly available, you're going to get smarter on how you make those decisions. I wouldn't just, walk into any of those folks, bank, account, insurance, or lawyer, until it's well thought out and you kind of vetted some of those with some of these public.
So I appreciate that is a wonderful final note, because this whole series is about access, and it can feel and look intimidating, and especially when it's hard to put all of this into one box. Everything's so individual. But knowing that there's a bunch of free resources, there are people that are willing to get me started and defined, and then I can use that knowledge once gained to go through and find some more people who are real professionals in each of their areas. David, John, thank you so much for your time today. I know it's 8 o'clock at night, it's a Tuesday, so I also want to thank everyone who took the time to join us. This is our end. I will follow up with notes and a recording, and that's it. Take care, everyone. Thank you for joining us today.
Thank you for joining us.